Hey folks, Dan Frio here, the rate update. Today is September 29th, 2021. Got some good news for rates. We had a little reprieve today, and I got some really good news on the number of houses coming on the market. So don't go away. We'll be right back. Okay, so the good news is we have some encouraging news in regards to the housing market. Take it away.
Pending home sales in August jumped 8.1% month to month. That was an unexpectedly high jump. The street was looking for about a 1% gain, and this came after 2 straight months of decline. Sales still down 8.3% year over year, but all regions did see monthly gains. The strongest gains were in the Midwest and in the South. Now, the Realtors chief economist Lawrence Yun said rising inventory and moderating price conditions are bringing buyers back to the market. We do still have very high prices, though, up nearly 20% year over year, according to the latest Case-Shiller index. But that was for July, and realtors are saying that while they still see very strong demand, they are seeing fewer bidding wars as these buyers come up against affordability issues. So again, pending sales, which are a measure of signed contracts in August, so an indicator of future closed sales in September and October, taking a very large jump, up 8% in August. Morgan?
Okay, so a lot of the stuff that I've been predicting is coming true in regards to the housing market. You know, why more houses seem to be selling, and I'm going to show you that right now, how home sales are up 8%. You're going to be like, well, they're killing it right now. Well, not really, because there's not much inventory, but we're going to see some inventory coming in shortly, as I was stating before. So all the news is starting to follow this trend. So let me get on to it without further ado, because I know you guys are wanting me to get to the point. So the first thing we want to look at is right here. This is the August pending home sales are up 8%, as you just saw by Diane Olick. Okay, but let's figure out why. Okay, so I think a lot of the people are now starting to figure this out. A supply shock is about to hit the housing market. How big is it going to be? Well, why is there going to be a shock to the market right now? Well, it goes through forbearance. Look at these keywords: forbearances. At the height, 7.2 million homeowners were in forbearance, and so forth. So you go down through here. How many are coming out, and what's the projection looking like? So the projected monthly exits you saw here. Remember I was saying in September, October, November, we're going to probably start seeing a lot of this come in. Look right here. That's how many people are coming out September, October, November. Right? Look at that. So down here, I highlighted this. The big question now is how many of these borrowers in forbearance will actually list their home? Well, a conservative figure is 25%. So if you take 25% of the 1.5 million, okay, it's going to be over 200,000 houses hit the market. You know, that's a kind of a conservative number. I'll put it that way. All right. So that's where I want to give you guys some good insight on houses. These are people coming out of forbearance, and they're probably saying at least 25% or maybe a little bit more are going to most likely put their houses on the market. So that is great news for supply. And then also, as you heard, that we're starting to see less and less competition in bidding on the homes. So Yahoo's catching on. Well, Yahoo catches on to some of the stuff I say. You can see in an article back in, when was this? This was a while back. August of 2020. Look who? Yours truly. Right here. Who was mentioned in Yahoo Finance? Dan Frio, the manager. So that just to show you, I do have some insight into Yahoo Finance, I guess. So that's great news there. All right, so why are you here today, truly? To figure out what's going on with mortgage rates. So what happened in the MBS market? Dude, it was a roller coaster today. Federal Chairman Powell spoke. Let me give you some economic news behind this, and then I'm going to show you the roller coaster that we saw. Pending home sales were out this morning. We just had that post, or you watched that video here a second ago. But Federal Chairman Powell spoke at 10:45 this morning. It would have been 11:45 Eastern time. Well, let's look at the intraday chart, because this is very interesting. You can see right over here, 11:45. Look at the bottom, okay? That's 11:45. That would be the Eastern time. The other time zone was based on mine. Look at this deterioration that we saw. It went from here all the way down to there. That was we were up about 20, then we were down 20. It was about a 40-point swing. And then we had an uptick from there. And the nice thing is it's been a nice rally into the close other than this little blip right here. But look at this. We had a lot of buyers pulling up the market through here. So this might be a short-term bottom for us. Okay. And again, I want you to see where the economic calendar was at 10:45 this time, but it would have been 11:45 Eastern is when all this, basically this stuff took place. Now tomorrow, on a side note, we're going to have the continued jobless claims and the initial jobless claims. Guys, I'm going to go out on a limb and say, I don't know how this number is going to come back because the Delta variant is throwing havoc on this. These trends should start to get better. Now, the good news behind all this is the Federal Reserve is coming in saying, it's basing all their tapering and everything on the jobs market. They're also coming out now saying inflation's nuts and is it short-term, long-term, whatever. So let's throw that on the curve on the side right now. We're going to focus in on the job markets. Tomorrow's numbers are going to show us some insight. Are people going back to work? So that's going to be a number that we focus on tomorrow, and that could play some havoc in the market. But we aren't locking anybody today. We actually locked some people this morning before this complete crash, and then we've basically come up to some good numbers. We had some resistance numbers there. So let me go on to the broader markets. What did the MBS do? How's that looking? Well, did we break any variances or trend lines and so forth? So let's look at this. This is what happened with the MBS market in the last quarter. The MBS market, what is it? Okay, for those newbies out there. Mortgage rates are factored or determined by a yield on a specific bond that trades. It's not the 10-year Treasury. It's not the federal funds rate. It's not anything like that. It's basically the mortgage-backed security bond, okay? And that's this right here, the MBS. All right, up. When the price goes up, that means the yield or the mortgage rate goes down. We love green. We hate red. Look at this. I mean, basically from here to here, that is one catastrophic move. Okay, and we blew through all of the resistance levels. So I'm not going to go over that today because we're in uncharted territories right now. I watched a video this morning, a live conference from a bond trader in regards to treasuries, and he's saying, they specifically asked me, he said, you know what? I don't know. We're in times that we have not seen before. Look at all the stuff that's going on right now in the world. We basically had the Afghan, the pull out there, catastrophic. We had the debt ceiling. Is it going to pass? Is it not? The infrastructure bill. Are we going to borrow another $3.1 trillion for infrastructure? Don't know. Now the Fed, some Fed members are in hot water. Now also Congress, there's some people there that are saying they don't even want Federal Chairman Powell to be in there anymore. They want him out of there. You got all that going on with the Delta variant, with everything else. Guys, it's nuts out there. So this is basically I feel like I'm day trading right now because mortgage rates usually go like this, not like this. So that's when you really need us to find and pick that specific time to lock in your rate. So let's go over what rates look like today. And now we're starting to see this uptick trend. Okay, so we follow the Black Knight report every day and what's going on with mortgage rates over a 1 month period and then over a 1 year period. So this is the 1 year period. Look where we were. We were down here. Let's go right up to here to the conforming rates. They're the aqua or whatever this color is. They were about 2.9, say, a year ago. Where are we right now? Over here and up 3.21. Okay, so that's how basically this is what this chart looks like. Down here, this gives you the current rate, 1 day, 7 day, and 4 week delta. Delta means change. 30-year conforming rate today is 321, jumbo 314, FHA 325, and VA 285. Guys, these are not my rates. These are the national averages throughout the country, okay? So this is where the rates are. So you should, if you're looking to refinance or buy or anything, your rate should be right in that range, okay? So if you come back to me, it's like the article that Yahoo Finance quoted me on. We'll go back there. It's basically, when people were telling me they're getting a 1.99 30-year fixed rate or something like that. I'm like, yeah, it's like me going by a gas station like, holy moly, that gas is 50 cents a gallon, cheaper than anywhere else. But then underneath your breath, you're like, okay, I know I need to buy 4 pizzas, get my car wash, a case of beer, and all this other stuff. That's the way I reference some of this stuff, okay? Because, you know, if the national average is 3.21 and you're getting 2.25, there's something wrong there, okay? Just take that for what it's worth. Then the 1 day, 7 day, and 4 week delta. Again, delta means change. 3 basis points equates out to what? 0.03. Okay, so we're up 3 basis points from where we were yesterday, but now here's where it's starting to play. 7 day delta. So we're up about an eighth, 0.125 across the board on rates. We're right in that range, or we're a little bit higher on the 1 month delta. Okay, so within a week, we're up an eighth. That's a pretty big move. And they're only going to go up from here, most likely. I don't know what tomorrow's going to bring, but based on, let's look at the economic calendar. Based on how these employment numbers come out, and there is no Fed news, but every day there's some news coming in that's just bad. So what I'm expecting, if you watch these trends here, this is a fast deterioration in the market. I'm expecting the market to stabilize and start to hit in these ranges here. The reason being is we've blown through all these resistance levels fast. You know, you go across here, these are what we call Fibonacci levels. These are resistance on ceilings and floors. And then we have a bunch of squiggly lines in here that's the 25, 50 day, and 100 day moving averages that are condensed basically right in here. We're down here. So we are, this shouldn't be, it's an overreaction. We should be back in this trend line here, or at least down in this range right in here. Okay, so that's what I'm expecting us to be in the next couple days, 3, 4, 5 days, unless there's some major news that comes out. So the next thing I ask you to do is, please, all I ask you to do is give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. How do you find out more about me and my team? Well, the first thing I want you guys to do is, if you're in the mortgage process right now, send me a copy of your loan estimate so I can review it with you guys. I'll do it for free. I'll review your loan estimate. Let's see if I can maybe get you a better deal, or I can recommend you do something different, possibly. I'm either going to come back to you and say, hey, I can counter and get you this better deal. Or, God bless you, what you did was fantastic. Or, did you think about this? And I might have some other options for you. So how to find out more about me and my team and how to reach us is go to therateupdate.com. Going to take you right there. Well, you shouldn't get this. I got a lot of blockers on here because I get so much spam on a daily basis. But here's what the website's going to look like. There's a lot of tools and functions here. One of the biggest things you should be using if you're looking to buy a house, click up here and figure out how much would that house payment be for me and anything else. Look at this cool feature we got. Hey, Dan, I'd be interested in refinancing if you can get me this rate. So how do you do that? Click here, get started. What'll happen is you'll get this bar, okay? You then plug in, what rate are you looking to do? It is going to ask you for some questions. And if you follow my channel on a daily basis, you're gonna know why. So I want 299, I click here, and then you're gonna have to give me some specifics so we can plug it into our monitoring system with our rate calculator. And when that rate becomes available, we will reach out to you immediately and let you know if we can lock you in. But if you want to find out more about me or reach us, give us a call at 844-775-LOAN right here, or apply now. You can click right there and that'll take you right to the apply now section. Or you're watching this at night or on the weekends and you're like, man, I'd really like to talk. And I know you guys aren't there right now, but what can I do? Don't forget about it. Click here, schedule an appointment with me or one of my loan officers so we can answer any and all questions that you might have. So that's it for today, guys. Thanks for watching. God bless, be safe, and I'll see you tomorrow. Bye-bye.